10 juicy stocks to watch next week, people. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're doing what we generally do on a Saturday. We're having a look at 10 stocks I'm going to be watching next week. Some interesting ones in there. We have a few companies we've never spoken about on the channel before, and we have some fan favorites that have earnings coming up next week. So it's going to be an exciting week, people. And I just have to say thank you all so much to everybody who went ahead and picked up a t-shirt or a hoodie over the first few days that the online store was launched. The support was insane. I appreciate you all so much. I cannot wait to see people rocking these t-shirts and hoodies, people. That's going to be so cool. So right before we get into the video, can I please ask you to smash a like, as it really helps me and the channel out so much. I'd really appreciate it. If you're new around here, please hit that juicy red subscribe button. We just broke through the 20,000 subscriber mark. It is still crazy to say that. And do drop me a comment down below. Let me know what you think of the video, and also let me know what companies you will be keeping a close eye on next week. I always love the interaction in the comment section with you guys. With all of that being said, guys, let's not waste any time. Straight into the first company of today. So we're starting it off, people, with my baby, this channel's baby, my biggest holding as of right now, Workhorse. And why we have to keep such a close eye on them next week is because quarterly earnings are coming out. Now, the first quarter of this year was the first time that they pretty much ever beat estimates, and they actually posted a positive EPS. Now, analysts are predicting a negative 0.11 EPS. I'm honestly not too sure what way I expect it to go. I do think that anything could happen. I know that there's been some really good funding. I know that our balance sheet will definitely be in a better place, but as far as actual earnings go, I don't think it's going to be particularly special. I do think that the last two quarters of these years, particularly the very last quarter of this year, is going to be really important. But with this one, I'm going to keep a very close eye. We're going to see how it affects the stock's price on Monday and Tuesday and so on. So the Zacks consensus estimate for the quarter's loss and revenues is pegged at 12 cents and $300,000 respectively. And I did go through this in a recent video, but their expenses have been pushed up. A big part of the reason being R&D, SG&A as well. Their expenses have just gone up in general. So look, there's not really much point in speculating what is going to happen. We just have to wait and see, but it is very important that when it happens, you are aware. So that is Workhorse, and I will more than likely make an update video on these guys on Tuesday, depending on how earnings go. Okay, we have some companies we've never really spoken about on the channel. First up, we have Livongo, okay, who has been on an absolute tear the last 6 months, okay, up nearly 500%. But has just given back about 16.3% of that very recently. Now, this is a company I have not done enough research into, okay, but I might be getting a special guest onto the channel to speak about this lately, because I know a lot of people want this video. But something very odd happened, okay? So Teladoc Health announced that it would be acquiring Livongo Health in a cash and mostly stock deal. Both stocks have taken a beating since the combination that initially valued Livongo at $18.5 billion, and it was announced Wednesday morning. So Teladoc shares plunged 22%, okay, and Livongo surrendered 16% of value. The market is implying that the combined company is worth less than the two players on their own. Now again, I don't know enough about Teladoc or Livongo, but this doesn't really make a lot of sense to me, and I have spoke to a couple of people who are heavily involved in Livongo, and they think that this is giving an excellent opportunity for people who may have missed the run up in the first place. But I will make it very clear, I don't own a position in either of these companies just yet. And it's funny as well, Wednesday morning's second quarter report was a forgetting afterthought, but it was a beauty. Revenue growth accelerated for the first time as a public company, rising 125% to 91.9 million. There are now 410,000 members enrolled in Livongo for diabetes, up 113% over the past year. So things are looking very good for this company, and out of nowhere, just because of this, they are dropping like crazy in value. But let's just keep an eye on it. See what happens going into next week, see how people start to react after, you know, the initial tailwinds have come through. We'll see what happens. Another company who just had a really interesting move, okay, dropping over 31% over the span of less than a week. And it's another company who, when we look at the 6-month chart, was on an absolute tear, people. Now, we have spoken about FSLY briefly before on the channel, okay, but basically they're in cloud computing services. So look, let's just say FSLY had very good earnings. Two things that held the stock back were FSLY's monster gains earlier this year, so they've already gone up so much in value that a certain amount of what is to come has to be priced in, okay, and US tensions with TikTok. FSLY was one of 2020's biggest winners, up over 400% year to date through Wednesday's close. The TikTok situation is a bit more nuanced, okay? FSLY provides service for TikTok parent ByteDance, and it's actually its largest customer. TikTok accounted for 12% of its revenue through the first half of the year. So obviously with the tensions that America is threatening to shut down TikTok, obviously Microsoft is coming in to try and stop this from happening, but It doesn't look good for FSLY as of right now, considering that is 12% of their revenue. And you know, it's kind of up in the air what's going to happen next. Now again, this is a company I'm not involved in just yet. I have considered buying in the past, and I am considering buying right now, considering just how much value has been given back, but my mind is not completely made up. The fact it was such a good quarter earnings, and I 100% expect TikTok to stay in the US, I think that this could have been some sort of an overcorrection. But I will now start to actually keep up to date with FSLY a little bit more. I kind of forgot they existed for a little while, but when you see a move like this, it grabs your attention. Okay, another brand new publicly traded company I've been asked about a few times now, BigCommerce. What I will say is, zero interest in buying in just yet, but I do want to put them onto the radar and speak about them briefly because I've been asked about them a lot. Essentially what they are is a software as a service platform company that powers branded e-commerce stores, including store design, catalog management, hosting, checkout reporting, and pre-integration into third-party services such as payments, shipping, and accounting. The company has been often compared as a rival to Shopify, and that is exactly what I want to say, is that there is an awful lot of competition in this market. A lot of very well established competition. Now, it doesn't surprise me that this company may have decided to go public now with the whole, shift to people working online. A lot of people setting up online stores, myself included, people, and not a financial advisor store. But personally, I have to say I'm not particularly excited by it at all. Now, they already do have over 60,000 customers across 120 countries, okay? Ben & Jerry's, Skull Candy, Unilever, and Sony. They had a good first quarter, okay? Hit $33 million in revenue, up about 31% from Q1 2019. Shopify, okay, total revenue for Q1, $470 million at a 47% increase year over year. It's a lot bigger. It's a lot bigger, let's put it that way. One of the companies I've not done very much research into yet. I might end up changing my mind, but right now, after doing some initial research, I'm not very excited about it whatsoever, and that is from somebody who is a massive bull on e-commerce in general. And then another company we've never really spoken about on the channel before, we have Peloton, okay? And this is one I've kept up to date a little bit over the times, okay? So, 6-month chart, we're up 138%. On the monthly chart, it's been a little bit all over the place. From the very highs, they're only down 6%. It's been a very good run all in all. So these guys essentially are in exercise equipment. That's the main thing that they do. They sell stationary bikes and treadmills, okay? It also targets more customers in things like yoga and cardio with subscription app service. The main thing I'm really worried about right now is the bikes and treadmills. So they got a boost in July after CFO talked about a product pipeline, possibly including a cheaper treadmill and a connected fitness rowing machine. Back in May in the earnings call for their fiscal third quarter, okay? Woodward said, starting in the first week of March, we saw a spike in demand for our bike and tread due to the virus. The accelerated sales had continued up until the time of the call. With many gyms still closed or limited around the countries, investors expect this sales trend continue for Peloton in July also. But as well, guys, if they're doing more direct sales, they're going to be directly making more money. Now, it's not until September 10th that Peloton releases its fourth quarter and first full year results as a public company for fiscal 2020. I do personally think this is going to be a really good quarterly report, because again, they're selling more bikes and they're selling more bikes directly. Obviously, if you buy a bike from a shop, that shop gets a certain amount of the proceeds, etc. So it is one I've kept up to date with a little bit. I am going to dedicate some time to doing a little bit of a deep dive into this company very soon, and I'll let you guys know what I think ultimately. Right now they're just on the watch list. I don't plan on buying just yet, but that's Peloton. Okay, we have 5 more companies, all of which are a little bit more familiar on this channel. Okay, first up we have DPHC, DiamondPeak Holdings Corp, Lordstown Motors. Full video on these guys was made recently if you want to check that out. But I want to see what happens to these guys when Workhorse releases their quarterly earnings. Regardless of whether it's good or bad, I want to see how that will directly affect DiamondPeak. I mean, really guys, since going public, they're not even up 20% for a company like this. I think it's absolutely crazy. I think the valuation as of right now is disgustingly low, and I do think that when the merger does go through, this is going to be much more than a $12 company. Of course, we're going to have to wait and see, but really, I want to just see how this stock reacts alongside Workhorse. So they're going to be listed on the Nasdaq and gain an infusion of $675 million through the merger. And the CEO, Steve Burns, said that should get us all the way to the finish line, and I most certainly agree with him. The transaction, which is expected to close in the fourth quarter of this year, okay, so it could take a little while to see some really big moves, includes an investment of $75 million from the GM. The combined entity would have a value of $1.6 billion. GM's stake will be significant, but less than 10%. So not any particular news I'm waiting to see. I'm just going to keep a very close eye on them, see how they react to Workhorse. Okay, next up we have another juicy little EV company. We're looking at Nio. Now the reason we have to keep an eye on Nio to report second quarter 2020 financial results on Tuesday, August 11th, in 2 days time. If you guys are like me and have a lot of EV companies, it's going to be an exciting week. So recently they surged over 13% in a day as the company reported a tremendous July sales report, and there is now optimism amongst investors as the July sales report is released ahead of the quarterly earnings call. So let's see what happened, guys. Okay, analysts have the same expectations they did for the first quarter of 2020. I have a good feeling about this one in all honesty. Now, Nio Stock is pricey, but the company's growth outlook is enticing, and this is something I try to get across when we speak about a lot of these electric vehicles, is that traditionally they are overvalued. If we look at things like PE ratios, etc., we have to value these companies differently. And again, this is a company I have a full video on if you want to get my thoughts on them, because originally I wasn't a Nio bull whatsoever. I didn't really like the look of them, but now I absolutely do. China is just a massive market, okay? And Nio has a massive portion of that market already. Apple's iPhone is not the top smartphone brand in the largest country in the world. Instead, local brands such as Huawei, Vivo, and Oppo dominate, okay? That shows how much the Chinese value local brands. And if that is to be true, and if it does stand to be true going forwards, Nio is going to have a great place in the world of EV. But anyway, just keep an eye out for this quarterly result. Let's see what happens. I am excited for this one, I'll say that. Microsoft, a company I absolutely love. Now on the 6-month chart, we're up 12.6%. Okay, quite good, obviously. From the very bottom, it's been an incredible run up, over 56%. And it's been very steady, you know. We see our little bits of downs, our sideways, but in general, it is going up. What I really like about Microsoft right now, okay, is they're a massive tech company, and they're not involved with any of the antitrust. You know what I mean? So there's not the same stigma that's being carried around, what was it, Facebook, Apple, Amazon and Google. Massive tech company, not being attacked by the government. You love to see it. And maybe they're even trying to get on the government's good side, okay? They're trying to get TikTok, at least the US portion of TikTok, to take away all the private information away from China, which is something that especially Trump as a president would very much so enjoy. Honestly, I'm surprised the stock has not moved more off the back of this news that they are hoping to get the US portion of TikTok. And now it's come out, okay? They want to acquire all of TikTok, not just US operations. I mean, guys, if Microsoft get the entirety of TikTok, that could be absolutely massive in the long term. It could be the equivalent of Facebook getting Instagram for $1 billion and it's now worth $100 billion. Except TikTok is far bigger than Instagram was back then. Honestly, I am really surprised this has not enticed more people to buy. And I do think that if any news comes out saying that Microsoft has purchased TikTok, Microsoft is going to go to the moon, people. So it's already a company I absolutely love. Like, I really love this company. I have a decent position in them. I will more than likely buy more very soon because of this. I just want to start keeping a very close eye on them so I know exactly what is happening in regards to TikTok. And even if the TikTok deal doesn't happen, if they don't get any portion of it, I still love the company to pieces. That would just be an extra juicy bonus. Oh baby, Facebook stock, right? We finally started to make a nice move, okay? Up over 16% in a span of a week and a half, and now on the monthly chart we are actually up just shy of 10%, which is absolutely fantastic. When we look on the 6-month chart, it's been a little bit slow. I mean, you know, not a lot was happening for an entire 2 months there pretty much, okay? It was relatively sideways, which was quite odd with Facebook, and now we are starting to see a nice move to the upside yet again. I'm a massive fan of Facebook stock. If you've been around the channel for a while, you know that this is one of my biggest holdings. It has been in my top 3 for months now, despite everything else I've bought. I love Facebook as a long-term company. A lot of people are speaking about the antitrust that's going on right now. Honestly, I think it's going to be fine. You know, it may lead to some sort of a short-term pullback. I honestly don't think it will. If it does, I don't think it will be massive. Just like what happened with the ad boycott. Remember, we dropped 10% in a day? And then we boomed back up way past that previous high. I could see a similar thing happening. Facebook is one of those companies that is so big and so many people love that if there is ever a big pullback, that entices so many people to buy in. So when things are going good, it goes up. When things are going bad, it very shortly comes down and people want to buy more than at a discount. In the second quarter, Facebook reported earnings of $1.80 per share, nearly doubling the $0.91 per share the company recorded in the second quarter of 2019. Nearly doubling. Revenue represented an 11% increase year over year. And apparently revenue was flat in April before staging a recovery in May and June. Now there was also $3.1 billion in additional expenses related to legal settlement and taxes that quarter. Also saw net income fall almost 50%. It is what it is. These things are going to happen every now and again. I'm still very happy with how the company is performing. I want to keep an eye on them. I want to see what happens. I want to keep up to date with the antitrust. I want to see how people are going to continue reacting for the next couple of weeks weeks in particular, because it's been a little while since we saw this nice of a run with Facebook. It was happening constantly for a little while, but then things really did slow down. And the final company, guys, I don't need to introduce you, it's Apple. It's Apple, and what a run we have been on with Apple, okay? Up pretty much over 20% in the span of not even 2 weeks. Wow, it's beautiful. Up to a $1.9 trillion market cap, people. Essentially, there was an absolutely incredible quarter earnings report, and they announced a 4-to-1 stock split. And in general, people are just getting very, very excited about Apple again, and I am happy about this. I have 3 shares at an average price of $364. I pretty much always bought at all-time highs. I bought a little bit around here, I bought some around here, I even bought some around here. I always buy this company, it's fine. If we look at Apple's 5-year chart, okay, I love looking at the chart like this because it's a clear example of why buying at the highs should be okay. So let's say you didn't want to buy at $115 a share because it's the highs. Well, you would have never got a chance to buy this company and you just missed out on 300%. Even on the last 6 months, okay, as I said, I've literally bought the highs the whole way up and I now have a cost basis of $364 with 3 shares. Sometimes it's okay to buy the highs. Apple's probably going to be very volatile when this split happens. It's just the nature of it. 6 years ago, Apple did their last stock split, okay? And what happened was Apple's stock price climbed steadily in the weeks leading up to the split. After it happened, there was a brief but significant push higher in the share price. After a few days, that trend reversed itself and the stock briefly eased lower before resuming its general upward trend. I want to hold Apple for decades. It's that simple. Whatever happens, I will hold. I will not be taking profits. I will not sell. I might buy. That will be it. But guys, they are the 10 stocks I will personally be keeping a very close eye on next week. If you have watched until the end of the video, you, my friend, are a true legend, and I really hope I was able to give you some value and insight into some of these companies, and also, of course, some entertainment. I have to say as well, guys, thank you all so much for being so understanding that I didn't upload yesterday. I was expecting some backlash, to be honest, but I got a lot of kind words from you guys, both on here and on Instagram, and it meant a lot to me. I do really think I needed that break. I have been extremely busy on here the last couple of weeks. I didn't miss an upload for over 3 months, and I felt really good to just get that rest. So thank you all for being so understanding and supportive. It genuinely does mean the world to me to know that you guys are on my side. And as well, I have to thank you all so much. The launch of the shop went better than I ever could have expected, and that genuinely is so exciting to me. I haven't really spoken about it before, but having a clothesline, selling merch, was something I actually wanted to do since I was like 16. So to finally see that come to fruition and it actually be a successful launch, it meant a lot to me, guys. So thank you so much. And if you haven't checked out the website yet, it'll be the first link in the description. Check it out, people, you know, it's pretty cool stuff. But anyway, guys, I hope that you all have an absolutely fantastic day. I will be coming at you with a double upload today, so if you're seeing this, keep your eyes peeled, guys. A few hours time there'll be another video. I hope you have a good one, guys. Peace.